Portfolio Builder members, welcome to our Friday trade alert. We've had quite a swing of profitable trades on the SPY ETF. Our emerging markets play that was down considerably yesterday jumped up to about break even today. GDX is up a little, and TLT we might slow bleed for a little bit, but I'm expecting some volatility ahead as the VIX is getting crushed, stock market's at insane prices, and there's no phase one trade deal. So let's do a quick bit about who we are, and then we'll jump into today's trade alert, review the entire portfolio, and then finish up with the top news I've collected over the past 12 hours. Okay, so here we are, daily income trade alerts at noon Eastern. This is our trading schedule, and we will not trade outside of these time zones. So the SPY ETF is only traded Monday, Wednesday, Friday at noon Eastern. The emerging markets ETF is only traded on Tuesdays at noon Eastern. The TLT, that's your 20-year Treasury ETF, is only traded on Thursday at noon Eastern alongside the Gold Miner ETF, GDX. Now, in terms of keeping your life simple, it's a 2-to-1 ratio of the SPY to the TLT. And that's how we get the right allocation of capital. If you want to make your life a little more simplified, you can skip emerging markets and GDX. That won't really affect, in general, the profits we're making because emerging markets is very correlated to the SPY, and the GDX at this point in time is very correlated to the TLT. Now, if you do want to make extra profits, I would highly recommend you follow the full program. And so our goal is to deliver 1% a month, and our average return has been 1.35. Now, some months it's a little less, some months it's a little more. We've only had a single month where we lost money, and in that month we lost 1%. So if you hate losing money, and you're not overly concerned about generating big profits or beating the S&P 500, you're going to love this program. Also, if you're a little bit smaller of a portfolio, but you still have the mindset that you want to play it safe and grow your portfolio with precaution and a smart strategy, instead of just riding it and trying to get lucky with stocks, well, this is a portfolio you can follow that has the same basic allocation of capital in terms of equities versus bonds. So you'd play the Tuesday trade with 400 shares of emerging markets, and then the Thursday trade with 100 shares of the TLT. In this chart, we're looking at the S&P 500 versus our return. And again, the people who really like this program have large accounts. They're much more concerned about protecting their wealth than trying to outperform any index or anything for that matter. They just want to pick up the easy hanging fruit and play it safe at all times. So check this out. In December, S&P 500 fell 18%. We made 1%. January, February, we picked up 2.2, 1.7. March, April, we had 2.7, 1.2, and then surprise, stock market tanked 7%. No good reason, just some profit taking probably. But our strategy worked. Pulled in a 2.2% return. In June, we made 3.2. July was our only loss, negative 1%. And that was because we were trying to predict trade war escalation. Bad news, I was a month early, and so coming out of July, guess what Trump said? We've got a farm agricultural purchase agreement with China. That sounds funny. We're supposed to have one of those right now, aren't we? By August, he lost his temper and raised tariffs. That's what I think is about to happen in the next 2 to 4 weeks, and why we're still playing it safe, although we are making some good progress on the SPY in terms of safely collecting profits. In fact, 5 of the last 7 SPY trades we generated had a substantial profit. Now in August, he surprised me. I thought the trade war was going to be pushed down the road, and surprise, he came out and raised tariffs in October, which did get delayed. And then he threatened huge tariffs in December. And so our TLT kicked in, the SPY options, put options protected us from that huge drop in the SPY, and we pulled in a 0.8% return. September and October have been tough. In one side of the story, we've got China buying some agricultural products which leads you to think they want a trade deal. And you have the U.S. saying they want to do a trade deal, but there's no trade deal. And they continue to argue about all the details, and it makes one wonder if China really wants a trade deal or not. Our portfolio is simple. It has 4 ETFs. It's extremely diversified. The assets are uncorrelated, and it's all you'll need for your retirement. Our goal is to generate income and safety, not growth or speculation. You can simplify your holdings, reduce your risk, get better results with less work, and weatherproof your retirement portfolio. And good morning, Ron. Also, if you call Dean, you can reserve your spot today at 505-322-7515 and save 60% Friday only on an annual membership. So if you're on an expired trial watching this after the close, call them right now. If you're on an active trial and you just want to bypass missing out on this opportunity, call Dean. We can lock you in and still extend a few extra free days if you have a few left in your free trial. This is our disclaimer. All right, let's jump into today's trade alert. So we opened this position on Wednesday when the SPY was trading at 308.71. And unfortunately for us, the SPY jumped to 311.14, a gain of 243. And we had sold the 310 call option. So we did give up $1.48 of that profit, more than half. So that's a bummer. But you can see we've been highly profitable for the last 7 trade alerts on the SPY without having very much risk. If we were just to buy the SPY ETF and suddenly something negative hit, we could give up $5, $10, $20 on the SPY overnight from tariffs being risen and the trade war escalating. But we're not doing that. We are carefully generating profits on the SPY by selling a covered call $1 above the current trading price and then purchasing a put option $1 below. And so this makes it so we can either gain or lose $1 per share maximum during each trading period. And as you can see in the trade alert document, you can go back to October 28th when I predicted the SPY was going to fly to 315 from this hope of a trade deal. Hey Scott, how's it going? And so that prediction is coming true very quickly. And if we get a phase 1 trade deal, my expectation is this can travel higher to about 330. So we'll keep a close eye on this phase 1 trade deal. If it does go through, or at least there's good news, we're set up to profit quite a bit from emerging markets position on Tuesday. Plus, we have another potential dollar we can pick up on the SPY between now and Monday. So we're not completely getting left behind on this big move on the SPY. We've been actually having really nice profits, which we can see. I'll go to the P&L of our SPY trades. We're up 1.4% in November and 1% in October. But my fear is that the trade deal may break down and we're going to see a sharp sell-off in the SPY. So we want to be extra precautious when we're at these extremely elevated prices on the SPY, with PE multiples now getting above 19, compared to the rest of the world where they're stuck in a PE multiple of like 13. So it's highly valued, it's priced to perfection. If the trade deal does collapse, I'm looking for a big spike in the VIX, a huge rush up in the TLT and GDX, and again, we'll be positioned perfectly for that. So while we've been picking up these gains in the SPY, we're set up for something bad to happen, and we'll have very limited downside risk and set up for the TLT to scream higher. Okay, so that is the results of the most current trade alert. If we scroll down a little bit, you have a summary of your trading schedule, which we just reviewed. Next, I am updating this daily, so you know exactly the P&L on every open position, whether it's good or bad, at all times, every single day. Every single chart, graph, and P&L is updated daily for you. So in the emerging market, we did pick up a big gain because this position was near a maximum loss yesterday, which was very concerning because usually the SPY and emerging markets trade in tandem, and are highly correlated, at least when there is positive trade talks. So that was leading me to believe when they were diverging that there potentially was risk ahead. And so this is now down 6 cents and only down $228 on 3,800 shares in our portfolio. And so the next time we'll touch this position is, again, Tuesday at noon. As long as nothing bad happens in the trade war between now and then, expect another bullish trade alert on emerging markets coming Tuesday. Most likely we'll pay a nice premium for a tight put option and then take very little credit on our call so that we have plenty of room for the asset to go up in the case of any good news. Meanwhile, the TLT is down 32 cents, or a loss of $1,216, and we have that exact setup. We have a tight put option right below it, and then an out-of-the-money call option that we sold. So very little downside risk in our portfolio on the TLT if a trade deal were to come through. But on the other hand, if anything just falters in the trade deal, expect the TLT to go considerably higher. And the same setup is true for GDX, but we're actually up on GDX currently. Here's a look at our current P&L. We're still showing a 0.5% loss in November, but once again, we're trying to lock in the profits, predicting the move in the SPY, and that, in this current environment, has been much easier to predict. What we're trying to catch next for the next half of November is a huge jump in the TLT. So we have to let it slow bleed until we get the big pop, and then we can lock in the profits on the other half of the portfolio. So I do suspect the higher we go on the SPY, that I'll get those collars tighter and tighter, so that there's locked-in profits on the SPY, and then we'll be sitting pretty for a nice jump in the TLT. And it is ready for a sell-off with any bad news. Emerging markets popped from a 0% return in November up to 0.7, so headed in the right direction on that portfolio. Bond portfolio went from negative 2.3 to negative 2.4, so we lost 0.1% on that overnight. But once again, I'm not concerned with the bond portfolio at all. The big picture is TLT is going to go dramatically higher for probably the next 2 years until the Fed runs out of rope and drops their rates all to zero. We'll take a look at some of the negative economic news and global slowdown that will pretty much force not just America's hand, but all central banks' hand in terms of lowering interest rates, which will boost bond prices and lower yields. Okay, the precious metals portfolio is still down a little bit in November. However, we did have a slight gain from yesterday to today in GDX. Okay, so we've already reviewed our P&L against S&P 500. The main thing to point out is that our profit versus maximum loss is a 14-to-1 ratio. So we've risked at most 1% to generate 14% of gains. How much risk has your portfolio had to generate what return? Do you have that good of a ratio? Because that's really what our goal is. And that's what most big hedge fund managers who've grown to hundreds of billions of dollars deliver. They're not trying to beat any index. They're trying to deliver high return with low risk. Okay, so here's your new trade alert. Buy to close the 310 call. Allow that put option to expire worthless. And then we're selling the 312.50 call and buying the 310.50 put. So we've been just laddering this up $1 every other day until we get to our danger zone, which is going to be, for me, I'm thinking 315, where I'll get extremely tight in this option collar until we do get some sort of positive trade deal. Okay, so here's your risk graph, and again you can see our maximum profit will be about $1 per share of the SPY, but on the other hand our maximum risk will be 95 cents. Okay, let's hop into the topical news of the day. Today I have this organized by China news up top, then U.S. business news second, then political news, and then finally the charts. Chinese, this is from CNBC's Edward Lawrence, who's been, somehow he has pretty much the first-hand knowledge of what's going on in the White House. I think he's been assigned specifically to track this. Chinese trade sources tell us that there will be a primary level call between the U.S. and China trade delegations on Friday to try and finish getting a phase one deal with China on paper. This call follows deputy level calls today, which U.S. trade sources confirmed. This morning we had last night we had Larry Kudlow, and this morning we had Wilbur Ross on doing a little press piece about the China trade deal. Larry Kudlow says talks over the first phase of a trade deal are down to the short strokes. Feel like we're in Groundhog Day movie right now. U.S. Commerce Secretary Ross will either have a deal with China or keep the tariffs in place. To hold a call with China today about a trade deal, we are much further along with the details of a deal. Okay, now this is from a Chinese-controlled newspaper. Opinion: the U.S. side wants to end the trade war as soon as possible. That's not the wording from the U.S. Washington should immediately issue licenses allowing U.S. companies to resume supplies to the Chinese giant Huawei. U.S. likely to extend limited export waiver for Huawei. And I found out from the interview with Wilbur Ross that this is just for 3G and 4G equipment, which is being sold to rural parts of America. And so Huawei is going out selling all these products at a loss. Everything from rip-offs of Cisco products to rip-offs of Samsung phones. So they are absolutely trying to just flood markets with cheap goods. They don't care if they're making money or not. They're just trying to take over that industry. And so apparently if we didn't have this lift, some companies in the U.S. would be out of business. So. But they're not allowing anything relative to the build-out of 5G to occur in America. As well as they're trying to go get all our allies to also follow suit with that move. U.S. Attorney General Barr says Huawei and ZTE cannot be trusted, call them the threat to our collective security. Jeffrey Snyder, Powell says the global economy is going to rebound. The Chinese by word and now by deed are telling him there's no way. The Chinese data backs them up. Chinese IP below 5% for the third time in the 4 months. 5 years ago, less than 8% was considered a disaster. In this chart, we're looking at China industrial production crashing. And again, it's not the level of production that they're producing that's the issue. It's the change. The rate of change is deaccelerating. Or it's accelerating to the downside on every metric you can find. So while they still show some growth, the rate of growth is accelerating to the downside. And this is going to send a ripple effect through all of their trading partners. Unless they can get a whole bunch of debt added to their bubble here, which is critical to keep Hong Kong running and to create a deal with U.S. because U.S. does have the power to really cut them off from capital, as we are the biggest source of capital in the world by far. Okay, dollars go in, China's economy goes up. You can see this is from 1998 to 2009. From 2010 onward, dollars are going out, China's economy, and their reserves are going down. And he's saying this is not rebalancing, this is just showing the big picture of China's slowdown right here. Jeffrey Snyder, China's communists finally held their long-delayed for plenum. Rather than give away any opposition the chance to voice it, the session was all Xi Jinping. It seems he has consolidated his position. With Xi Jinping firmly in charge, that means there's no deviation from the political course, authoritarian, because it is being set by the economic one. There is and will be no global economic growth. That's ultimately what all this has been about. Eighth Party Congress, right here in 2013, 18th Party Congress. Growth is temporarily delayed. Stimulus will keep us going until then. And now we have the 19th Party Congress, and there's no growth. Rejuvenation is really about dealing with this reality that they have to slow down and manage all this debt that they've picked up. Meanwhile, Hong Kong's economy will fall into deeper recession with GDP growth down 4% year over year in Q4 due to the escalating social unrest, according to a new Bloomberg intelligence report. That will make the GDP shrink 1.5% this year. Hong Kong shocked into the first annual recession since global financial crisis. And so you can see those. This is 2008 right here. The trade war has hit U.S. exports to China far beyond the Farm Belt, with dozens of states registering big declines this year. Texas exports, mostly oil and gas products, shrank 39% through September, while auto shipments from Alabama plunged 49%, and Florida merchandise slid 40%. Total U.S. exports to China fell 15% to $78 billion. So China may be targeting the states, which are swing states, to help negotiate a better trade deal. And you can see percentage change for all merchants that are being hit the hardest. So these blue states are the states getting hit the hardest right now in terms of less exports to China. And this is happening to countries all around the world, not just their trading enemy, the U.S., but all their surrounding business partners. And that's why we see Germany on the verge of a recession. China immediately lifts ban on U.S. poultry. They desperately need to replace the hogs lost to the African swine flu. Food inflation is a huge problem for them. I predict more to come. Donald Trump's U.S. $50 billion farm deal not possible after trade war markets shift. So China's been buying from new people now, and they're balking at this demand to purchase $50 billion. Trump's U.S. $50 billion China farm deal, it is possible. They do buy $124 billion of food right now. U.S. President has repeatedly called for China to buy $50 billion of American farm goods, which is more than double the $24 billion record in 2012. African swine fever has killed demand for the biggest U.S. export, soybeans, while other countries have supplemented America in the agricultural supply chain. China imported U.S. $137 billion in agricultural goods in 2018. So they're going to have to piss off a whole bunch of smaller countries to pull this off, if they will. Now, a lot of senators say, who cares what kind of trade deal you sign with China? They won't abide by it anyway. China is about to get angry U.S. Senate to vote, show support for Hong Kong protesters. U.S. Senate may pass Hong Kong Human Rights Act soon, if no objections, says senators. Now, Mark Rubio pushing this through. A Cambridge University student organizing a Hong Kong march in Cambridge on Saturday has been doxxed and received death threats after his email and personal details were posted onto mainland Chinese websites. Here's a few charts just showing global trade slowing down. This is the Shanghai air freight outbound and inbound tonnage percentage. You can see it's been slowing down ever since the trade war dramatically, going from plus 17% down to as low as negative 22, bouncing a little bit here. Some people argue that perhaps people are just trying to front run the tariffs hitting in December, so we don't know if they will or won't. Air freight index in the worldwide semiconductor crashing. Eurozone air freight index also in negative zone. The repo madness is expanding. So this is supposed to be for like a week. Now it's turned into a month. And so they've opened it up. Now we have overnight lending. I believe the cap on that's something like 80 billion a night. Then we have 14-day repo, and now they've just added 60-day repo. So I think the total now in the repo is about 180 billion. Plus they've added to the balance sheet just shy of 300 billion, 280 billion dollars. So somebody or a bunch of people have lost a ton of money, and they're trying to cover it up. We don't know what exactly the story is. There's some rumors that it's Citibank, but who knows? So we don't get to audit the Federal Reserve because it's not really part of the federal government. Corporate credit markets giving a hard pass to the latest rally in equities, partly related to downgrades, energy weakness, and overall piss-poor loan quality. Few abuses in investment grade, but not something easily dismissed. So we can see that the investment grade high end of the corporate bond market starting to sell off a little bit relative to stocks flying up. And again, our key indicator to be short stocks for a considerable amount of time would be corporate bonds having too much expense to make it worthwhile for them to sell debt and then go turn around and buy back their own stock. And that's been the biggest driver in the last 5 years, with about $5 trillion of corporate buybacks pushing stocks to record highs. From the long view, slowdown isn't over yet. Excluding autos, industrial production was down 0.5%. Manufacturing output fell 0.6% in October. Manufacturing ex-autos in October was down 0.1%. No sector showed a gain in output. Now, I do think with the Phase 1 trade deal, all this negative sentiment, all these companies really holding back are going to stop doing it to such a degree. So this Phase 1 trade deal will be pivotal to predicting which direction these markets trade for the next several months. And here's another job openings as a leading indicator for the non-farm payroll. And so this is predicting that a job growth slowdown and unemployment rise could be headed our way. But we do see a lot of pickup in job hiring into the holidays. So we'll just see how that turns out. So far, the unemployment rate pushes lower and lower and has been a big bullish signal for equities markets. And that's because we're getting more people employed without too much push in labor costs. Now, if you do listen to all these business economic meetings with the Fed Powell, they're all complaining that they can't find quality workers who will work for cheap enough. So that's becoming a bigger and bigger problem that will start to suppress the profits of these corporations, and just your self-fulfilling prophecy for the market cycle for a capitalist society. You get too many people working, you get their labor costs up, and all of a sudden the profits go down. Okay, cash shipments versus GDP, and that is also headed lower. And the change of the GDP has been dropping in the last few quarters after having some hot quarters initially from the big tax cuts. Trump tweeting another record stock market 21 times this year despite an ongoing and totally unfounded witch hunt, and the Democratic Party that would love to see a nice big juicy recession. In actuality, the potential for the United States is unlimited. We will power through the do-nothing Democrats. U.S. industrial production plunges the most since March 2009. Import-export prices plunged the most in 3 years, so much for the Trump tariff inflation terror. And this is primarily because the Chinese have devalued their currency to make sure their export business isn't disrupted. And meanwhile, the Japanese love U.S. stocks. One of the few central banks, well, not one of the few, but one of the few major central banks and of the major economies that are allowed to actually buy stocks. Most only buy their own bonds, and at that, government bonds. But we can see just massive money flowing into U.S. equities from Japan. And meanwhile, officials are using the word disaster to describe the widespread crop failures happening all over America. Makes you wonder, I guess they say they have a lot of food ready to ship off to China immediately. But could they even produce $50 billion? Probably not. So Wilbur Ross was saying that this would be a target that we'd have to hit over several years of slowly growing that budget, and then to have some enforcement mechanisms to punish them if they don't follow by the agreement they lay out. And so probably they won't A, make too good of an agreement to make Trump look good, and then B, even if they do, will they break it? And if so, does this all reignite? Everywhere Marie Yovanovitch turned bad. She's testifying right now, live on TV. And some pretty blatant lies. I mean, we got Joe Biden on TV being spread all over the media, talking about how he motivated their prosecutor to not investigate Burisma or his son, and they straight out ask her that question if she's aware of it, and she just says nope. Anyway, then fast forward to Ukraine, where the new Ukrainian president spoke unfavorably about her in my second phone call with him. Is it a U.S. president's absolute right to appoint ambassadors? They call it serving at the pleasure of the president. The U.S. now has a very strong and powerful foreign policy, much different than preceding administrations. It is called, quite simply, America First. With all of that, however, I have done far more for Ukraine than other presidents. Rand Paul to initiate Senate vote to force Hunter Biden impeachment testimony. Oh boy. Looks like Joe Biden's dirty laundry is going to be front and stage in the next few weeks here. Breaking the transcript of the POTUS first call, so he released this during this testimony today. I'm not going to read it, just another transcript from the call. Nothing damning inside any of the transcripts of any of the calls. But there it is. Another rant from Trump. He's very upset about this, clearly. From Nancy Pelosi. Today we hear one of our most respected diplomats who spent her career as an anti-corruption crusader. She was viciously smeared by Trump's allies, removed from her post, then threatened by the president on his perfect call. So the drama behind this lady up here is that she wouldn't let a bunch of Ukraine's corruption investigators fly to the department to talk about a bunch of corruption they found involving U.S. actors. So Glenn Beck had his third piece come out on Wednesday. It's very good. If you want to subscribe to his channel or the Blaze TV, it's another 2 hours about this whole Ukraine scandal. And in this one, he actually goes much further back in the timeline to see what on earth is America doing in all these little countries. And it's alarming. Okay, Leader McConnell, it's almost been a year since President Trump signed the USMCA. It would create 176,000 jobs, add $68 billion to the economy, and raise wages, but it's frozen in Pelosi's House for months. Elizabeth Warren, maybe if I were sticking $3 trillion under a mattress, but I'm not. I'm using it for universal child care, canceling student loan debt for 95% of those who have it, investing in public K-12 schools, which will grow the economy and provide economic security for families. Meanwhile, 96% of respondents to a Deutsche Bank market survey thought a Warren presidential win would be negative for the S&P 500. Wonder why. Okay, here's your SPY chart, and you can see it is just rocketing to new highs. It is due for a sell-off with any bad news. That's why we're tightening that option collar. LQD is your investment-grade corporate bond ETF. Looking for a sharp sell-off in LQD before I'm becoming tactically short on equities for a long period of time. As long as credit's cheap, expect corporations to borrow and buy back their own stocks. It's just as simple as that. And as long as the Fed is in an easing period, debt will remain cheap. Meanwhile, TLT had a nice bounce over the past few days and is potentially gearing up for the next big move up. I think it will break into new highs as soon as we get some kind of problem with the trade deal. Meanwhile, GDX at this point in time is correlated to TLT. It should be until the Fed runs out of rope. So the Fed's at the 1.5 to 1.75 interest rate level. In terms of how much rope they have, they could go perhaps drop 25 basis points every 3, maybe 6 months if things are going smoothly. Trade war escalates, they may be raising rates much more quickly. So I'm sure Trump knows that the next Fed meeting is in December 11th through 13th. So if he does want them cutting rates further, which we know he does, now's the time to escalate. Emerging markets has had a bit of a sell-off after a nice rally for us. We did catch some nice gains on emerging markets. My target for emerging markets is to get to 52 plus. With the trade deal, without it, I believe this could head much lower, probably to the $20 to $30 range, just because of massive fear placed on emerging markets. So there's a number of things the U.S. can do to punish emerging markets, but the number one risk for the equity product EEM would be for the U.S. to start to restrict capital flows into anything that's Chinese. And they have already threatened to do that and have some bills being written to do this. So the Chinese don't allow us to go audit their companies. As they say, it's top secret Chinese secrets. So you just have to get a little statement from them called an ADR and take it for what it's worth. Meanwhile, we're paying close attention to CNH. This is our boot camp trade that I'm dying to put on, and the time may be near. And also, Scotty will be getting our boot camp trade alert out after this live stream today. So, not ready to short their currency yet. We've got to see if this trade deal is going to become a deal or not, because part of the deal would be rolling back tariffs, which could potentially cause them to strengthen their currency, depending on how many tariffs are pulled back. Now, if they don't roll back tariffs and create a deal, the next move is at least 15% tariff on $300 billion of goods starting December 15th, which would just cause them to probably push the conversion rate up to 7.4, maybe as high as 7.8. Now, if Trump goes beyond what he's already threatened, then the limit could be a little bit higher. And for our boot camp members, every 10 cents it travels higher is going to be $1,000 profit per contract. So that's the simple math. One contract represents $100,000, and so the basic idea is we're gonna sell their currency at today's price and then buy it in the future with the futures contract at hopefully a cheaper price. And the difference in price is our profit. So we'll be shorting CNH when the time comes. Now, if you listen to Kyle Bass, he thinks the bigger winner is shorting the Hong Kong dollar. And so they've had a lot of pressure. If this continues to escalate, I am happy to jump on that bandwagon. The downside risk of shorting the Hong Kong dollar is very little. This thing is extremely leveraged, and it really hasn't budged for 5 years. You can see it's only gone up as much as 8 cents. So if you had been trying to short this for the last 5 years, like I think actually Kyle Bass has, then you would have lost only $800 and then any spread on the futures contract. But the upside is this thing could just really devalue. And he does have some presentations where you can go look up Kyle Bass Bloomberg, and he goes back through history where there's some currencies you thought were perfectly stable, and then finally enough pressure imploded it. So we certainly have a lot of pressure on Hong Kong right now. So if we do see the trade deal breakdown, I'll be ready to put out a trade to short both CNH and the Hong Kong dollar. Okay, gold, a little bit of a sell-off. Central banks are buying this up at record pace. They're in a position where they have to lower rates, print a bunch of money to support their government, and now to have any credibility for their currency, they need to load up on gold. So China and Russia are the primary countries that are causing this big run up in gold. And now we're starting to get some hedge funds and all that wanting to speculate on this position as well. So the big picture for gold is it will most likely travel much higher unless we have a miracle worldwide recovery and we get all these central banks to stop lowering rates and Also, we need the governments to create less deficit versus growth. So right now, we're creating almost twice the deficit versus the growth. So that's a bad sign. Obviously, that is not sustainable. Here's your 5-year chart on oil, sitting right around 60, which is perfectly fine for us. If it were to go below 50 or above 70, that would be an alarm bell for us. If it goes too hot, we want to be short the TLT. If it goes too low, we want to be short the SPY. So that's what I watch that for. The German bond 30-year yield, I think this little relief rally is most likely coming to an end, especially, of course, if the trade war escalates. Now, even if it doesn't escalate, just kind of stays in nowhere land, it does look like China is really slowing down, and they're just trying to figure out how to deal with this slowdown. I don't think part of their plan is going to be to send a bunch of money to Germany anytime soon. So it does look like there's just a huge downward weight on bond yields worldwide, and any little pressure to it will deliver some nice profit on that TLT. So here's your 30-year U.S. Treasury, and you can see a very similar pattern. Meanwhile, crypto is still staying elevated. I know that looks like it's not that pretty $10,000 price, but that's still very high, especially considering in our portfolio, we jumped into Bitcoin in December at around 3,000 and Ethereum, I think, around 45. So we've had tremendous gains on a tiny percentage of our portfolio playing crypto. All right, guys, that's a wrap for the portfolio update today. Any questions in the live member audience? And again, our bootcamp trade will come out after this. And instead of doing the daily dump, I have found that was a little bit too much for everybody to consume. So I'm just going to give you a weekly dump every Saturday so that you have plenty of content to study and keep up to date with what's going on in the world. All right, guys, thank you so much for your time. We'll have our next SPY trade on Monday, emerging markets Tuesday, and then the TLT and GDX on Thursday. Don't forget about our freebie webinar next Thursday as well.